Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. Learn about fix and flip loans, BRRRR financing, rental, fix to rent, commercial, multifamily bridge loans, business loans, and so much more. And now, your host, Beau Eckstein.
We got a very special guest today, a local California resident, now in Brentwood, right?
That's right. Yeah, we just moved right before the pandemic. We were lucky to be one of the very last ones to have the mobile notary come and say, this is the last person I'm going to sign for. Everyone else is too bad for them because I don't want to risk myself. So we got very lucky. We closed on like the 20th or something of March.
Wow. Good. So, yeah, it's interesting. You would think during the COVID that it would have been slow. My parents have used to live out right by you, and they listed their house in Discovery Bay, and the thing sold in 3 days. I mean, it was just like right in the middle of the pandemic. I mean, it was unbelievable. The market's completely hot, and it's still going.
Yes.
There we go.
There we go. I'm back here, guys. Sorry about that. I know I'm trying to kind of improvise and get it going. I will be in the car in a little bit, heading out to an important meeting. This is a very important show. I just want to say good morning to everybody. Beau and I are together to really bring out the best to get your business to the next level, how to really get great loans and close them on time, and how to invest in multifamily syndications, and how to get motivated, how to really move the needle, like we call it, who we are and how we can make the best of the best in every day, every single day, moving the, big action steps. How are you, Beau, bud? Hi, Derek. Derek, our good friend, is our guest speaker. Beau is gonna, how are you doing, Beau? Yeah,
I'm doing well. I'm actually working on a really, really large loan, which, a lot of times it's a difficult transaction because they're developing like a big condo project on the East Coast. So, I'm always learning new things and just figuring out how to put the money together, right? And you got to go through a process, right? Because right now, to make a $70 million loan in this market on raw dirt. I mean, it's entitled, but it's not, there's no infrastructure on it. So, I'm keeping my fingers crossed that we're able to get the deal done. But it's just, as a loan officer, loan originator, you just got to be able to solve problems like nonstop, right? There's always problems. I mean, our business, it's a very tough business. It's because everything is, you fight for every inch, right? As you know, as you buy properties and you're financing properties, right, guys? It's just brutal. And as a loan originator, we're stuck in that piece. So the borrower is upset because we're not closed. They want to break ground, right? So you're dealing with that. And then, because at the end of the day, everybody wants the same thing. The loan people want to close the deal and make a profit. The borrower wants the money to, leverage and build their portfolio, but it's just a challenging process. And COVID is in the middle of it, makes it a little bit more challenging because people are questioning everything now. Like, well, what happens if, the stimulus runs out and people stop paying rent, right? So there's a lot of factors going on right now, but it's also amazing as I find more and more lenders, right? Like if somebody reaches out and says, hey, we need a loan for this, right? Then I have to figure out, what's the best way of structuring the deal. And that's how I start looking at PACE financing, for example, Vinny, something that if you're in a certain location, you can use PACE as in your capital stack to increase your leverage, right? And so learning these things just as myself as an originator, but for you as borrower is very important because at the end of the day, we want the highest leverage possible with the least cost, right? So we have to bring in less investors as LPs, which means a higher return for everybody in the deal. Right?
Totally.
That's the name of the game.
Beau, could you kind of maybe explain a little bit to the audiences, about the PACE? Can you explain that a little bit more in detail, what that entails? Yeah.
Sure. So PACE is basically, it's like a lien, but it's not. It's an assessment. and it's for all your energy improvements on the property. So whether you're developing a property or if you're retrofitting a property with like energy efficiency, whatever's deemed energy efficient, we can actually finance that. So you could actually own an existing property and you might want to replace windows, new roof, new solar. So you might not have to take out the senior lender. Now, the tough part right now is getting the senior lenders, the first mortgages, right, to agree. They have to consent to this. But if putting the piece on subject to the area and location being approved, it becomes very simple. So this is like, you're talking about, a few years ago, they were maybe doing 60 million in volume, and it's just growing. It's going to be a, multi-billion dollar industry within the next few years. I don't know the exact stats. So I had to educate myself on this because, many of my colleagues and my contacts and my clients, what are they doing? They're building and renovating and doing value add projects. So what do we need? Yeah. We need capital infusions at a pretty low cost, and this is just a beautiful fit. So I'm really excited to kind of become an expert, or somewhat of an expert in this over the next few months. It's a lot to learn, but it's providing a lot of value for my existing clients. So I'm excited about that. But without further ado, let's cut into the chase here. We got a great guest today. We got Derek Clifford from Brentwood, California. And what I really enjoy about this is he's a part-time real estate investor, part-time real estate investing for full-time professionals. He just wrote a book on it. So I think that's key, because we all have to start somewhere. A lot of us can't leave our W-2 jobs. Now, Derek's a paid pretty well W-2 employee, but he realizes the benefits of starting out as a W-2, right? Make a good income, you're bankable, and now be able to, dive into real estate investing. And within his first year, he was able to pick up 13 units, right? Which is that's pretty,
sure.
That's pretty great.
Very commendable.
Yeah.
Yes.
Thank you.
Derek is also the founder and CEO of Elevate Equity, a firm that partners with individuals and companies to purchase, improve, and operate cash flowing multifamily apartment real estate. And like I said, Derek has written and published his first book, Part-Time Real Estate Investing for Full-Time Professionals. He also loves to give back his knowledge and has a passion for breaking down complex investing concepts into easy to explain topics, which is very important. He's helped many people start, maintain, and grow their portfolios to achieve their own financial independence. In his spare time, Derek enjoys relaxing with his wife, biking, hiking, reading, household construction projects, and spending time with his wonderful wife. Well, welcome to the show.
Sophie, yeah. Right. Hey, Derek.
Thank you guys so much for having me on. It's an honor to be here.
Oh, wonderful. And, Derek, I was so impressed when you shared in the mastermind sessions, I think not this past Wednesday, but the Wednesday before. It was so exciting to see how you were able to write this book. And it's a great book with so many illustrations. And I was just sharing and going over, and, and you did it in such a short period of time. I know there are lots of people in the world who want to write a book, who have so much knowledge, and who want to spread the good knowledge to other people. And I really encourage everybody that I meet, they should do that. Everybody's got a book in them. I say that way, but it's the hardest thing to do. It's the, I think the fear of heights is one, fear of speaking is another one, right? The biggest fears. I bet the other thing is to write it down and write a book is probably the third fear. So make it, demystifies it for us, and let's kind of get into your mind and how you decided to do this. What really got you going? Share with us first.
Sure, yeah. Thank you, Vinny. And that's dead on. Everything that you've said is 100% true. Everyone's got a book in them. And I think that a lot of people are afraid to put themselves out there because they may not think, oh, this isn't enough, or I don't have anything valuable to share. But to be honest with you, and you guys both know this, all of this information is already out there anyway. People want to know about you. They want to know how you express these ideas and how you break it down. So they want to know more about you, because really you are your own brand, and building a book. This is a copy of, by the way, the proof copy of it.
Yay, love it.
Yeah,
remember I want that hand, what's that, autograph?
You got it.
I write you that check $100, but
you
bet.
You got it. I don't need the $100. I just
no. I want.
You can write me that check.
Yeah, but yeah. So the book, when you write a book, it really is your business card, because to your personal brand. Because if you don't have a book, or you don't have something that you're passionate about, I hate to say this, but most people who are working a full-time job, it is not. I don't mean to say this in the wrong way, but it's not enough in this day and age. People are doing side hustles to try to get ahead. So if that's really what you're into, you've got to write a book to formalize and crystallize your brand. No one is going to take your book and they're going to let it sit on the counter in your kitchen and just throw it away like they would a business card, right? If you have a book, it's something that's relatable, that's pass onable, so to speak. People can give it to others, and it gives you lots and lots of mileage in terms of brand recognition, and also just exposure, and also the satisfaction of being able to say, I've accomplished something, I've done something. And so it's been really great. So that's the basics. That's why you should write a book.
Mm-hmm. When did you decide to write a book? Let me ask you. This is like August, right? 2020. And was it during COVID, or did you have it before, kind of digging into it? Or
the gears started turning when I went to an event called Best Year Ever Blueprint by Hal Elrod in San Diego back in December. Yes. There was a presenter there who was pitching the self-publishing school. And so, after talking about it with my wife and everything, we were trying to find a way to get our multifamily syndication business up off of the ground. And as you know, Vinny, when you first start, it's very, very hard to do that, to try to attract capital to you, right? So I figured that the best way to let everyone know what it is that I'm doing and how I'm doing it would be to encapsulate everything that I've learned and all the questions that I've compiled from all the people, in the office about how did you do this, putting it into a book that could be very nice looking and easily hand offable to other people. So that was my strategy. And so the gears started turning at that conference, and that was in December. And I started writing in February, March, or I think, January or February. And so, as you know, there's quite a bit of time between now and then. It turns out editing is a process. Formatting is a process. There's a lot behind it. So we can get into that a little bit later on, though.
Totally.
Yeah.
Bo, what are you doing? You're texting somebody.
I was sharing.
Beau's got deals. Beau's got deals.
I was sharing our the photo I just took of us.
Totally. Again, everybody watching us, guys, I hope you like our nitbits and all the nuggets and the guest speakers we are bringing to you. Please go ahead and tell us where you are from, and tell us and ask us some questions even after the show. When you're watching us, hundreds of people watch us afterwards. Please go ahead and tell us what we'd like, what topics you would like us to talk about. Who are some great personalities and guest speakers we would like to bring on this show? As you know, I do another show Thursday night at 5:30. I just want to put a plug on that one too. 5 o'clock PST, Pacific Standard Time. That's on the senior living investing and all the innovative ways how we are turning the corner with the silver tsunami and everything. So please do watch and look for that show, which is our senior living investing show. Then again, 2 podcasts, which is Syndication Made Easy from Vinny Chopra. I've been doing it. The book sequel that I wrote last year. And then Positivity Brings Profitability, another book I wrote, which was introduced last week. And
Fantastic.
Thank you so much. Thank you. And then again, we are starting. All these shows are for us to give knowledge, give strength to people to move it to the next level. So please let us know how you like and what more things we can do. Derek, go for it, buddy. Yeah, would you like to share the process with the audience, which they can take it and write a book in next month?
Sure. Yeah. So again, it all, in order to make something work, it all has to start with intention, right? So you have to have an idea as to what you're going to write about. And once you have, I mean, the best way to draw inspiration from that is, what do people ask you about all the time? Or what are you passionate about? What do you like to do? And that's where you can start. So what I'm going to do right now is I'm going to share my screen, and I think I can press this button here.
Okay, perfect. Awesome. That's really exciting. I know StreamYard, we love this. Oh, thank you. You guys are great. Thank you, Facebook user.
All right.
Yeah.
I think you guys got to opt in when you leave your comments on StreamYard so we can see you, because we can't see you unless you opt in.
Okay,
So,
please opt in, guys. Yeah, please opt in. Love to meet you all and tell us where you're from. Oh, there we are, right there. And we will love to bring great content to all of you. So please let us know. We are here. Aha, love it.
Okay. So what I started the process out, once you have your idea, just take a piece of paper and just write it down in the center of the page. Okay. Yeah. Then what you do is, now don't get intimidated here, but what you do is you build a mind map. Okay. Now it's a lot. Both Beau and Vinny know that I'm a pretty detail-oriented person. And what you do is you start out with the central idea and then three or four main things you want to touch on, right? And then from there, you just kind of explore each one. So the whole mind mapping phase is just getting ideas out on a piece of paper, right? Getting ideas of what it is that you know, just high-level ideas, and then trying to organize them best you can. What I'm not showing you is the 4 or 5 other pieces of paper that I worked on to get to this point. So this is more like a final draft of the initial effort. So, this only took me about an hour or two to do initially. And then of course I refined this a little bit because I'm an organized person and want to have everything on one piece of paper. So this is the first place to start. So the next thing that you do with this is you start to prepare a book outline. So you take some of these major subtopics, right? You can basically break the book up in any way that you want to. You can say, okay, here's part 1, part 2, and part 3 of the book. And then each one of these can be like chapters, these subtopics. And then what you do is you create this book outline, okay? And the book outline, each one of these Post-it notes represents a chapter, right? So they kind of feed into each other. Like you start here with, this is part 1. So, part 1, how to invest, and then everything below in these sticky notes is in that part of the book, so to speak, right? And then so you basically go in and you start to populate what it is, what chapter you're going to write in each one. And the reason that we did it with sticky notes is that if you want to rearrange where the chapters go, you just pick up the piece of paper and flip it with somewhere else, right? Mm-hmm. So that's how I did the outline. And then on each sticky note, I identified 3 or 4 key takeaway points that I wanted to talk about that would help build the high-level structure of each chapter. So, for instance, inside a real estate crash course, like this is the topic 6, you would say, okay, markets and cycles, what are that? How do you measure returns? What's the difference between owning your own private residence versus a rental property? And then some other resources to tap into. And so that's what this chapter ended up becoming. Okay. Oh,
wow. What are those little roundabouts there?
Yeah. So these little metal things they're magnets. And I went even one step further. Now that once I had my chapters, I pulled off 100 of these little magnets. Okay. And you guys don't have to do this, but this is what worked for me. And each little magnet, since there's 100 of them, represents 1% of my book's content. So I can plan out where my page target's going to be for each chapter. So obviously this chapter has got a lot of weight in it. And of course, that's leveraging others for multifamily passive success, right? So my book is a lot about multifamily syndication. So I wanted to spend a lot of time there. So this really helped me when I was writing my book to say, this is where I want most of my focus to go. Okay.
Got it. But can I ask you just over there? So this is on the wall and these are magnets. So is the background board like metal? Is
Actually,
that right?
it is on a desk, and I'm just standing over and taking a picture down on top.
Ah, okay.
Yep.
I got you.
Mhm.
So it's all on the desk, white color desk. I got it. And with the weight of this magnets, it doesn't have to really, I thought it was on a board, vertical board, but it's not. Okay.
Yeah, correct. It's
Got
down on top of the desk, and yeah, that's the best way to plan it because, like I said, you can easily move the stickers
Sure.
from one point to another, and so that's how I built the outline. Now, from there, this is where you've really got to start. You've got to get your mind around writing, and I think just like any goal that you're trying to set, when you're writing, you got to set an overall word count or page goal. And for me, I wanted the book to be not too long. I wanted it to be something that was an appropriate size that felt like it gave the reader a lot of surety or details if they wanted it, but wasn't too long either. So I set an overall word count goal right here at the bottom at about 30,000 words. Which equates to about 150 pages, 125 pages in there, depending on the type, the font type and everything that you use. But that's about what it is. And there's a lot of metrics that you can look up online to help that. But what I did was I started to break up my 30,000 word goal into weekly goals and then daily goals. Okay.
Wow.
And so you start on day one when you're looking to write, and you keep yourself accountable. So the best way to do that would be, as you guys know, in doing Miracle Mornings, you set aside a specific hour of the day or 2 hours, however long it takes you, and you just put that aside, and that is your focus. Sometimes, like I waited until the weekends to finish the entire section, and that's okay too. But this week, for instance, from Monday to Friday was a busy week at work, and so I didn't get much done there, and so I just had to make it up. And my whole motivation was to not fall too far behind on these goals, these targets each week, which is set at about 25% each week. So you finish a quarter of the book each week. And so you have to kind of keep up with that so that you can meet your overall goal.
Derek, this is amazing.
Yeah, I need some of your skill sets in this manner. I mean, the organization is just, it's borderline fanatical, but it is very, very impressive. I mean, Jesus, if I had this skill set, I would be on a beach right now.
Derek, I'm so glad you shared that, buddy. I mean, what it's all boils down to is the whys. Why you wanted to write this book to start with, how you want to make a big difference in the lives of busy professionals and teach them and show them how you can solve the problem, right? That's what I look at. ROT, return on time and return on investment and return on education. It's
That's
so
right.
important that we are keeping in touch with ourselves in every facet. And what's really attractive to me is that you had a game plan and you gave yourself feedback and you kept your score. I mean, that's the name of the game in this world. We can just increase tenfold our productivity if we just keep the feedback. Look at the goals daily, weekly, and everything. But even looking goal 5 times a day, by the way, I was reading a book, 5 times a day. If you read you look at the goals for the week, you will probably accomplish all the major goals by the end of the week. So thank you for sharing that. You bet.
Absolutely. Yeah. And one thing I want to say too is that if there's of you who feel inspired and do feel like you want to do this, please email me or go onto my website and I can send you all these tools and give you the copies of them. I don't have a problem with that.
Oh, so kind of you. So kind of you.
Can you build me something like this, but for a weekly contact sheet where it has like, no, because I want to I always set out to contact so many people a day because I need to contact you guys daily, guys that are borrowing money. So I need something that's simple to use that I can really track because I need to be able to track myself. And I think that's where you guys with the engineer mindsets, skill sets, right?
Let's get together. Let's
Yeah,
get together,
absolutely.
all three of us. I am very big on those, Bo. And in my last career, I mean, I had so many Excel sheets that I designed with the daily activity, and I would look into my repertoire and all my, Dropbox things, and Derek will too. And let's design some very spectacular feedback forms, we call them, right, to hold us accountable. And we could do that, and we could put it out in the universe. Why not, right?
Sure. And Bo, I'd be happy to do that for you. The key here is to automate as much as you can. So really, like, it doesn't look like there's a lot automated here, but really, if you type in one cell here, everything kind of auto populates. Even when you put your start date, everything just kind of fills out from there.
Love it.
That's because you want less inertia, right? When you're starting a process like this. So I already knew that starting out, that all I wanted to do was be able to log on, count the words that I did for that day, which is pretty easy to do depending on what you're writing in. And you just type in that number, you just drop the number in. And then that way you're keeping track of what your overall goal is. And then
beautiful.
After that, you guys, you end up getting a rough draft that looks a lot like this with no formatting, just blocks and blocks of text. And what they tell us in the self-publishing school is that you just write. Like, don't even worry about your grammatical mistakes when you're doing this. Just keep writing. Even if you know that you're going to like strike the sentence out later, the most important thing is keeping the flow moving. You don't want to give yourself any negative impression when you're writing to say, oh, that's not good enough. I'm not going to write this sentence, because then it'll slow you down and you'll end up like, jinxing yourself, and you'll stop the process, and the mental chatter will get too strong for you to even write further. So the whole point is to just keep writing. And then I worked on these images also on the book. So these are all things that I wanted to include in the book that helps make it easier for investors to understand. Because again, this book is written for people that don't have time. So I spent a lot of time putting this together as an easy to understand format, as to why, how this is how you would buy a single family house with leverage, and how you can take advantage of buying at a discount, on a house that's only $80,000 on a street where everything is selling for $150,000, how that works. Just lots and lots of good references and resources.
Oh my God, you're amazing, Derek. He shared these graphs. I mean, I was mesmerized. I really was, Derek, that's pictures speak thousands of words, right? We always say that. This is tremendous, buddy. Tremendous. Oh my God. I'm going to be in the car. I apologize.
Yeah, that's fine.
If I lose you, I'll come back.
Drive safe.
And then real quick, Beau, just to finish this out in just a couple of seconds here. So then, you get a formatter, and those people you can hire for pretty cheap. I think I paid $100 to format my whole book, and they will give you a cover design that you get to pick from. So I was able to pick from these four. And then eventually you select one, and then you come up with a cover design. And, these formatters are professionals. They do it all the time. So they'll just help walk you through the process. You write the description for the back of the book, and then they'll put together the spine design in the front for you, depending on what you pick. And then the end product is here, the paperback copy of the book, where it's got all kinds of good formatting, nice font type. It has great, icons at the beginning of each chapter. And then all the images are built in where they should be. And that's the process of writing the book.
That's amazing. And they can go to your website to order the book?
Yeah, absolutely. You can go there. There's a link to my Amazon Central page, and then it'll go straight to the book, and you can buy it on Amazon. And the audiobook should also be coming out very shortly.
Oh, good. I was going to ask about the audiobook. Well, I'll go ahead and find the link, or if you don't mind, email me the link so I can, when we repost it, we can put it in there. Let's talk about, you're basically giving somebody a valuable, it's a business card, right? Like you were talking about earlier, you can hand somebody a business card, but they're going to throw it in the garbage most likely. They're going to scan it in and forget about you. But, most people, like what we're doing in real estate, it's not really, we don't do this to make money from selling books, but we do it because we want to share our knowledge and and get in front of people that could truly benefit from, like, oh, this makes sense. I'm busy working. I'm making a pretty good salary, but I'm never able to get out of the rat race. They read your book. They go to your website. All right, Brandon Turner said 2 awesome dudes. All right, that's good. Thanks.
Thanks, Brandon.
Yeah, Brandon. This is. I mean, I'm just amazed at your skill set. I mean, it's so impressive. I mean, and you got that with your current job, right? You that's what you do at work basically is project management, right, Derek?
Correct. Yeah, I'm a project manager for people in California will know, but Pacific Gas and Electric Company. And there, I manage a lot of individual teams, and it takes a lot of organization to keep that all in place, because I run, anywhere between 12 and 15 different projects that are all multi-million-dollar projects with construction, where things are, you guys know how construction is, man. Sometimes, if one thing is holding up the whole train, you still got to pay for the whole train. So you got to clear those tracks and make sure that the train keeps on moving. So
there we go. Now, hey, look at this, Vinny. Well, be careful.
Hey,
you're
buddy,
driving.
Look at that Brandon Turner here. Brandon Turner.
He just 3 off. Okay.
Thank you.
You know you're big time with. You know you're big time when Brandon Turner gets on to watch your real estate show. This is like,
awesome.
I'm like sweating. I got goosebumps. Jeez.
I know. Brandon, buddy, congratulations on your success. Love you, brother. When we come to Maui, we got to have steak together. Or I don't know if he's vegetarian, we'll go vegetarian.
All right, so let's get back into the book. So this is what I like what you're doing, Derek, because now you've launched. Your first year in the business, you bought 13 doors. You've learned. You said, okay, well, you learned and you said, okay, well, let's get into multifamily because it's more of a scalable thing, right? It's a more efficient business model. And then you bought, I forgot what the building was. It's 17 units. It's got some commercial space, right? And so that was a big, heavy lift project, right? So, I know projects like that can put some grays in your facial hair, right? That's where you cut your teeth. And that's where kind of walk us through like that and like kind of the trials and tribulations of this. And then also, but before we get into that, the point I was trying to make is that, as a syndicator that you are now, you're helping people, get them out of their W-2 job in an effective manner. It might not be today, but in 5 years or 10 years, we're going to create a timeline to get you out of your job, or at least have the benefit to be able to quit your job and be passive and just go in real estate, right? And so that's the goal of the book, really. But also, writing this book is going to create opportunities because people are going to read the book, they're going to listen to the book, and they're going to say, shit, Derek knows a lot about this. He's a guy that I can relate to. He's a nice guy. He's got skills that I don't have. I would love to invest with a guy that's so detail-oriented, right? Because I know I'm going to miss things with the details, okay? That's me, for example, right? You got to have those checks and balances. So every good team needs a good detailed guy. Every good team needs a good capital raising guy, every good team needs a good property finder. So it's perfect. So people are going to start reading this book. They're going to go, wow, I like what Derek's doing. I like he's investing in Indy. Indy's a great market because of the price points and the cash flow. And so, in the end of the day, this is going to, launch your syndication business, right? I mean, that's the goal, right?
That was the goal.
Yeah.
That's right. Yeah. Because, really, I wrote this book for people that I were running into in the office all of the time. Right. And so this is a complete assembly of all the questions and conversations that I've had with people. And so most of the time, people that are out there wondering how to do this part-time when I'm too busy working a full-time job, all these questions are in here. And I also am trying to take an approach from, okay, remember, this is a family decision too, because if you're just starting out in real estate, most likely you aren't planning on it for a while. So the conversations are going to be new with your significant others. So if you live alone, maybe, you have more control. But if you have a family and kids and things, you're trying to wonder also, how does this risk fit in, right? So I try to walk you through in the book what is best for you? Is it best? Are you good hands-on? Do you like to solve problems, and do you like to have full control over your own destiny?
You're listening to the Investor Financing Podcast. We'll be right back after this break. Are you looking for funding? Are you getting frustrated trying to find a lender? Visit investorfinancingpodcast.com and click the Get Funding button. Complete the simple form and schedule a free phone consultation with one of our placement specialists. We have a proprietary directory of funding partners that can help you get the funding you need. It's fast and easy to explore the options available for your specific needs. Don't wait. Visit investorfinancingpodcast.com and get connected.
Then it might be best for you to start with single families, right? But if you're a very busy professional, you just want to know the basics, I'm trying to educate you on what questions to ask syndicators and why it makes sense to invest in multifamily. So I'm trying to present the whole picture, what it's like behind the scenes, investing while you're working a full-time job, including the risks, the conversations you're going to have with your wife, which sometimes are not that pleasant, especially if you're trying to get started, but you will work through it. What to expect, especially if you're going to go down the single family route and do this yourself, and how long it took me at every phase. There's actually, Beau, you guys are both going to laugh at this, but there literally is a graph in here, a Gantt chart, because I'm a project manager, that shows how long it took me from my first podcast of listening in real estate to closing on my very first house out of state. And so it's got all the things in there, like contact brokers, underwrite property, like it's got it all listed out. And it's all in this Gantt chart form. So you can see how long it took me. And the reason for me to provide that is because I wanted to give people a roadmap to follow, to say, how far should I be, 3 months into working? And, I'm hoping that everyone out there can beat, my time, how long it took me to close on my first one, because I want people
do you also talk about, Derek, I know the book is written now, do you give them the vision, what their portfolios can look like if they shifted from a single family home to a 4-plex or 8-plex or 12-plex or 20-plex, let's say, or some other, mobile home parks, right? Brandon is a king of that, right?
Yeah.
And Kevin Bubb and others. And I'm investing into one with my friend Dylan Marma, and so forth. So yeah, tell us a little bit more.
Yeah. So obviously, in the book, like I try to tease out the pros and cons of investing in multifamily and in single family. And I'll be honest with you, there's not very many cons in investing in multifamily. So I in the book, I do mention that the economies of scale, the tax benefits, all these things that most of the people that have started to learn about multifamily know about, I make a very strong case that it's most likely going to be the best scalable approach for people as long as you select the right operator. Vinny has done, he has over, what are you up to now, Vinny? Like 300 million in
380 million. All right.
$1 billion.
Oh, getting there, buddy. Getting there with God's grace, I think so. And then with the assisted living, I just want to send the message out in the universe. I would like to do $1 billion in assisted living construction also, which could happen with the help of, Beau getting me a lot of loans. Yes, no, we are really fortunate to have a great circle, around us. It's so important that we totally give to the universe with strong signals what we want to get done. I mean, I did not know I'll be at close to 400 million portfolio and now close to $1 billion, and we just got properties and all the different things, Yeah.
Yeah. So Vinny, like what you said, it's perfect. I think that picking the right syndicator, which is I highly recommend Vinny Chopra for everyone out there that's listening and looking for a multifamily syndication. Go look at his stuff, go on his website, because he's been a tremendous mentor to everyone, and he's been phenomenal. His multifamily academy is also very, very good. It's where I got most of the basis of my knowledge behind multifamily syndication. I couldn't recommend it enough. And it became a lot of the content that's here in this book. Just thank you, Vinny, for everything that you do. And Beau, thank you also for making stuff happen for Vinny as well. I know without the leverage, it's very hard to make it all work. So.
Well, it's Vinny, I have to say is that, we had Luke Wren on the show on Vinny's webinar on his coaching call, right? And at first I was listening, I'm like, hoorah. But, I started listening to Luke more and more. And I'm like, man, I really like what he's saying. Okay. He was great. He really, fired me up and inspired me. But even guys like Luke, they meet Vinny and they're like, geez, this guy has so much freaking passion and energy. Right. Like, and so sometimes I have these ups and downs, right? Like we get some like, I got this $60 million loan. And then all of a sudden we're having problems. The family office doesn't want to fund it. It might not happen, right? And then now I'm depressed, which was like yesterday, right? Or whatever. Now it's like, can I overcome those issues? And then we have these highs and lows, in business, right? Like, or we have a property and, a tree falls through the roof and we have to call insurance, or we have a couple of vacancies and we're like, shoot, I got to cover the rent cover the mortgage payment. So we have these ups and downs on a regular basis, really. So the key is really in here, right? Like that's what I've been finding. It's really in here. So I'm trying to control that, but also I see like on your side, show me what you're doing with your Gantt charts and stuff. Is like, I need to simplify that, right? Simplify like my daily to-do list to be successful, right? And so that's like the next book you should do, or the next little ebook, right? Because that's important, right? What are you gonna do on a daily basis to be successful? Like, and that's all starts with the mindset and telling yourself, okay, let's be positive. Let's go. Like I could sit around and like look at my emails all day and just delete, just spam emails and waste my day, which a lot of us do. But I could be making, 100 new contacts a day because I'm good on the phone, right? So it's important, guys. It's like I'm going after it on LinkedIn right now, and I have to say, guys, we got to be strong on LinkedIn. Everybody, multifamily syndicators, whatever your profession is. And it's amazing. I'll go on and I'll hear somebody on a podcast or something. I'll go look them up on LinkedIn. I'll connect with them. Like I'll hear somebody from, a director of a credit union that does some niche loans. And I know I can bring some of my clients there, right? Like, cause every lender is different. I'm finding them, I'm reaching out, I'm sending them a message. They're connecting me with the right people in their organization. So whatever your business is, make sure you're doing it on LinkedIn. And I was just on LinkedIn yesterday, just thinking about what a powerful tool that's free at our fingertips. Same thing with Facebook, right? Same thing we're doing right now. We're streaming good content for free to people, right? Like back in the day, it would take you so long to learn things, right? Now you can just join a, coaching academy and you can learn how to multifamily syndicate. You can go to our course and learn how to write a book in 30 days, right? Like it's like you didn't know anything about writing a book and you wrote it in 30 days because you had a system to follow and you followed it, and you're good at project management. Boom, done.
Execute the systems. Beau, when the first question that you asked is like how I was able to build my portfolio, including the multifamily. If you want, I can expand a little bit more on that.
Yeah, let's go for it.
So obviously, I write in the book about how I got started, but I'll just kind of rehash here quickly. My wife and I started completely by accident because she had bought her condo in Washington State about a month before the 2008 crash. So her condo was worth $250,000 when she bought it, and then when we ended up leaving, it was still at the bottom, less than $100,000 is what the market value was of the thing. So when she had to move to the Bay Area for a residency, we basically said, well, we can't sell it. We don't have the difference. There's no way that we're underwater on this thing. So we had to become landlords by default. And, on the drive down from Washington State to California, my gears started turning again. It's like, hey, we're underwater on this thing, but we're getting income every month past the mortgage and past all the insurance and all the expenses. So why don't we do this again? So then what I did was I started to look at real estate investing, and thanks to Brandon Turner also, if he's still out there, for all of the content that he put on Bigger Pockets, because that really just gave me all the confidence and knowledge I needed to start building a portfolio out of state. And so, it took me a while. I went on Bigger Pockets, tried to interface with some wholesalers and property managers, and then flew out to the market, met them, lined up a whole bunch of meetings like I do as a project manager. I literally met, I think, 12 people in one day. And I understood that it was the people that not driving around town aimlessly saying, oh, this looks like a good area. No, that's not going to work. Talking to the people who can connect you with the areas that are up and coming, that's where the rub is. So you need to spend your time when you're visiting your markets for the first time, talking to people, not aimlessly driving around and saying, oh, that looks like a good property, because what are you going to do with it once you do? So
true,
yep.
Derek. Hey, I want to apologize to everybody. I know this transmission I wanted to move this appointment, could not, but I want to shout out to David Green also. I know David also wrote a great book where, passively investing or out of state, right? I think that's
long distance real estate investing.
Yeah, long distance. So that's a wonderful book and good friend. And he's right there in Discovery Bay too.
He is.
Not far Brentwood,
He also wrote Burr.
Great content. No, go ahead. Which one? Burr?
I was going to say he also wrote Burr.
Yeah, exactly. And Brandon has written so many great books. Proud of these guys. Key thing is what we covered today. I hope everybody will take upon themselves. There is a book in them. Like I said that in the first part of the broadcast, everybody's got a book in them. And I'm looking my third book coming out. The second one just came out a couple of weeks back. And then third one is on senior living investing, made easy. And then also with Beau and I are writing a book on apartment lending made easy. So our whole kind of, idea is to educate. And like you said, Cliff, Derek, that information is out there, really. I mean, people Google and this and that. But if you're able to concisely put in a good, understandable way where people can read it in 1 hour and get the grasp of everything, you're doing a great service to the humanity. I feel that way, Yeah.
Absolutely. And you get to leave. Oh, go ahead.
Yeah, no. So I was just going to jump in. So Derek, you're currently in Indiana. That's kind of your main hub, but also tell us about other markets you're in and markets that you're looking at right now.
Sure. Yeah. So I have a few small properties in Cleveland, Ohio right now, but really I'm focusing and doubling down on Indianapolis just because I love the market diversification there, the very stable, steady job growth, population growth, everything there just looks to be really, really good. And I'm just looking for larger deals. Actually, I just submitted an offer for a 60 unit, which Beau, you helped me with the underwriting, helping us out with some terms of financing.
Yes.
And I really like Louisville as well. Similar Midwestern market. And then also San Antonio, just because for me, the price point is a little bit lower, but it's got all the advantages of being in Texas, and it's in that corridor, in that that central part of the state where there's all this massive population growth coming and continuing to go. So I just see Texas as a very, very strong place to be. So I'm looking at those. Then also I'm experimenting a little bit with Colorado Springs, actually. Colorado Springs looks interesting to me because it's got some of the network effects of Denver, which is a tier 2 city, I believe, in CBRE. But there's been some job spillover, and it's only about an hour away from Denver, and the Space Command is coming in there, and Amazon is going in. So there's already like 4,000 jobs that'll be added there. So
I just underwrote a deal there actually for these newer multifamily investors, and it was about a $6 million property. We sized it up on a bridge loan, got them terms, but unfortunately they didn't come eye to eye with the seller, which often happens. But so it looks like a great market.
Yeah. So I'm very curious about how that shakes out. It's just that the cap rates are very low there and the prices per unit are very high. So the cash flow isn't as attractive right now, but let's just say that I've got my eye on it for whatever happens with the economy, whatever happens with it. I think it's one of the places to be looking at because it's got appreciation and cash flow characteristics that I'm looking for.
I love it. Love it. Yeah, I think I want to like look in here because I'm in Vegas. I want to look around here and look in Arizona, some markets in Arizona too. Just I'd love to get something close, but I might not be able to do that. If you're getting a smaller size apartment, it's better close versus what Vinny's doing. It's easier to manage. You know, have somebody manage. You know, a 300 unit building and that's the thing, right? Like it gets a little bit easier to do the bigger projects once you get to that level. Because you have budget for property management, you have budget for everything. It's not outsourced and so forth. So I think you know, the more you do it, it becomes a little bit easier than when you're starting out. That first flip, right? That first buy and hold deal, that first burr. But yeah, I think really what I hear a book coming for Vinny is I want you to buy this title right now, Burr 2.0, and it's all about multifamily. We write a book, right? It's the same. It's a similar process, right? But I like, you know, I think like starting out.
See, I've sold 22 of my portfolio, 22. I mean, so made so many millions of dollars. How could you scale with burr? You know, single family, right? You can't really make $7 profit. You can't, you know. So it's a great strategy to do it in multi, what Beau is talking about. Maybe we should start on that book, Beau.
Because I mean, you just look at this. I mean, it's really like you go in and you get something that's just run like crap. It's just they're not paying attention to it. And surprisingly enough, there's a lot of management that's just not doing a good job, and these owners are burnt out. You go in there, you turn the units over, and now, I mean, the beauty of it is it's really comes down to an income, not a comparable type valuation, right? So you know if you can bump rents X amount and keep occupancy up where it is and lower vacancy, that your building's going to be worth X, right? So, I mean, and then on those type of deals, you're talking about doing cash out refis of $1 million, $2 million, $3 million, right? Like you pay off your investors and you hold the property long term, and you're making 50 grand a month in net cash flow on one building. I mean, Vinny's done that, right? Like that's game changer.
It's incredible. It's incredible. That's what definitely has drawn me towards the space from single family, was the scalability. And that's kind of where I start directing people towards in my book, and also in my conversations in personal life, because I mean, you got to start somewhere to understand the basics. And sometimes if you don't have much money, doing something to learn the vocabulary, to understand, to benchmark like what cap rates mean and property management expenses and all that, learning how to underwrite stuff, it's a good place to start. But ultimately, in the end, it comes back to commercial and to multifamily.
All right, Derek, will you answer this question?
There is a question from Paris. Hi there, Paris. Tell us, where are you from also? Do you think there will be multifamily foreclosures in the future? Definitely so. Definitely so, Paris. Actually, you'll see that happening as the moratorium on evictions is lifted. In some states, we have demand letters going out right now to the residents who have not paid for 4 months, for 3 months, that, hey, you need to make it current or come and tell us what arrangements we can make, or they'll be evicted. So there's a lot of toxicity. I say toxic on the rent rolls out there with every operator, myself included in the C class. Mostly in the B, we are collecting 98%, 96% rents. There are not too many layoffs or things like that. You know, at the like maybe you know, white collar, we could say, or engineer or electronic based, you know, demographics. But you're right, yeah. Paris, there will be quite a few coming in the next, I would say 6 months to next, maybe 18 months, to be truthful, because some of the operators who have great cash flows, they'll be able to survive. Like, you know, we are surviving, right? Because we got the forbearance, not forgiven, but forbearance of hundreds of thousands of loan now, by the way, and then we have to pay 1/12 of that back along with the mortgage of the next month. like in August, we had to pay not only for the month of August, but also 1/12 of the 3 months that we missed. So those kind of hardships will be coming. Lots of renovations have stopped, as you know. A lot of operators have stopped giving out the cash flow to the investors. That will put a downward pressure also, where the investors will say, how come I'm not getting returns? I need my money back. And that will also get into some, I live in Mumbai. Oh my gosh. Hold on. We are going worldwide, Beau. Our friend Paras is in Mumbai, India. I love it. I love it. Manages 24 units in Pennsylvania. Look at that. He lives in Mumbai, which used to be Bombay. I worked in Larsen Toubro, which is the Reliance Group, as an engineer over there many years back, 44 years back. And he's got 24 units in Pennsylvania. Awesome, Paras. Good for you, buddy. So there will be some. Get the cash ready. That's what I'll tell everybody. Get your cash ready, the sponsors cash ready, your parents, your relatives, because there'll be great opportunities coming in multifamily, in mobile homes, I wouldn't really buy strip shopping centers. I won't buy office space at this time. Storage space might be another place which will be really, getting good interest. But this is a 1 hour show.
Can I add something, Vinny, to that?
Please.
So what I heard from my accountability, my pod mates in the mastermind groups that I'm in, is that I heard that David Osborne said in GoBundance that the people that ended up making the biggest swing in net worth in their portfolio are not necessarily the ones who bought right after the crash in 2008, but they were the ones who bought from the ones who bought after the crash in 2010, 2011, right? So although maybe a lot of people are looking at this as, this is an opportunity if the market does fall, depending on the characteristics of this downturn, right? Maybe should we wait for the knife to fall to hit the ground completely before we grab for it? Or what's your guys' thoughts on that?
To be truthful, I'm a product of the crash. My first unit I bought was 14 units for $180,000. Look at that. 180,000, 14 units. And now I'm sitting close to 400 million. But the thing is, I didn't care what I was getting into. I didn't know the falling knife or this, like you said. You're right. We could wait for eternity to find where the knife will fall at the bottom and I'll pick up the knife. Many times you will not find those opportunities. Opportunity strikes you once and then it goes away. Literally, I believe in that. You got to take that little bit downward trend and then upward. You will only know when the bottom hits, when you have already gotten through the bottom. You can never say, hey, that's the bottom in the front. Never. You can only say, hey, that was the bottom in the back,
That's right.
So that's how I kind of look at it. But again, don't be naive. Make those right assumptions. Be conservative. Have the low LTV. All those things. Money is so cheap. For that $35 million deal that we are closing in 2-3 weeks, 2.53%. Holy cow. 2.53 Freddie loan, 10-year fixed, 5-year interest only, 30-year amortized, and they're going to give us a very good supplement in about a year and a half. Supplement up to 70% LTV. So even
That's
65
great.
to even 70. And plus also so much money that we can return to the investors and so forth like that. Hey, it's been no, go ahead. I
was going to say, Beau, when you quoted back some of the rates for me on the 60 unit that I'm looking at, you just helped give my investors an extra 1% cash on cash. So that's great.
Yeah. That's a Freddie Mac floater, so it's a floating rate. But the beauty of that program is very popular because it does adjust. But basically, you get in there, you have a 3 or 5 year plan with it, and there's only a 1% prepayment penalty, which is a lot, right? So you can then exit out of it. So it's a lot of people rolling into that product. I mean, it's awesome. It's going to be a great time for some. I look back. Just to give you examples, I got started in real estate investing I was in my early 20s and I started buying houses. And I was about 28 years old when 2007 hit. And I didn't really know real estate investing, right? And so I owned all these single family homes that didn't cash flow. So I got crushed. But I look at the people that got into real estate in 2009, right? Like everything they bought turned to gold, right? Like anything you couldn't do wrong.
Yeah.
But the real test is, during the tough times, what happens, right? Like you got to have staying power, and you got to realize that you're not always going to get 98% occupancy. You're not always going to get, 10% appreciation, 15% appreciation. There's times where single family homes depreciate and go down in value by 10 or 15%, right? There's times when banks freeze and you're not able to burr out of the property because you can't get a darn loan, like a lot of these people, right? Yeah. The rental loans went away for a couple months. Now they're finally coming back during COVID because there was no secondary market for it. Things like that happen. So some things are out of our control. Like who would have thought we would have this virus?
Yeah,
what did the virus do?
I was going to say that I'm heading to the bank, and I hope we can really promote, guys, everybody wearing the masks. And actually, I've got the double mask. I'm going to wear that first. And I've got the glasses. Look at that. Vinny's prepared right there, man. You got to be ready. This world has come to that, but we need to really be safely doing it for ourselves, but also for our fellow citizens. So I'd like to appeal to everybody, really, really, really take good care of yourself, but also take care of everybody around you. Let's decrease that number, decrease that COVID, positivity and deaths number. Thank you so much, Derek. It was such a pleasure,
Thank
brother.
you guys for having me. It was great.
This is amazing podcast, and it's a show. It's going to be, right there live. Please share with other people and come join us at 9:30 Pacific every Friday. Oh my gosh, I've got Thursday night show at 5 o'clock. Then I've got 9:30 show on Fridays. Right now, Vinny and Beau show. Beau, thank you, buddy. Thank you so much. God bless you all.
All right, guys.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.